Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Thursday. It is March the 16th. So many people have hit me up on our YouTube channel, on Twitter, on Telegram, email, all kinds of things saying, I don't want to invest in a limited partnership or a master limited partnership because I'm going to receive a K-1. And then I always ask why, what is the problem or what is the challenge? And very often they say it's too much work or whatever the case might be. And hey, you may be right, especially if you get many K1s like I do. But anyway, what I thought I would do is take some time and just briefly walk you through the concept of filing a K1. Now, just to put things into perspective here, I need to say that the information I'm going to share with you is predominantly US centric. Obviously, regardless of where you might be in the world, if you have the ability to invest in a US limited partnership, you're going to receive a K1 anyway, because you're a partner of the limited partnership, and they need to send you a statement of any distributions or losses or profits that you had made throughout the year. So although it's US centric, it might be applicable to other people too. Other things that I mentioned and that I might mention during the presentation, like a 1099, I'll explain that briefly, but that's also a US forum for things like dividends and miscellaneous costs. You could even be employed as a 1099 contractor, so 1099 contractor, and get paid that way instead of earning regular income as an employee, which in the United States is called a W-2. Now, the reason why I'm mentioning all these things to you is because in the sort of greater scheme of things, you sort of have three buckets from a tax filing point of view, one being a 1099, one being a W-2 if you're an employee, and you have earnings paid to you by an employer. I don't, so I don't have a W-2. And then, of course, there's also the K-1s, which I'm going to spend a bit of time just walking you through and explaining to you how this works. And I'm not quite sure exactly why people find the K-1 so offensive. I can understand why people find taxes offensive, but specifically the K-1 is really just a form that basically describes what happened during the past year for you as a partner in terms of losses, profit, whatever the situation might be. What is a K-1 exactly? So the Schedule K-1 is a tax document required by the Internal Revenue Service in the United States, which applies to owners of pass-through investment vehicles. What is a pass-through investment vehicle? That would be something like a limited liability company or limited partnership, which means you're a partner of the firm and not necessarily an employee or other investor. Now, the first thing that you can do if you are the recipient of a K-1, or you should be because you have equity interests in a partnership, and regardless of where you might be located, you would probably want the form anyway, so that you could just see exactly what it is that the partnership is declaring in terms of profits, losses, etc. Now, what you can do is you can log into a website. PwC is PricewaterhouseCoopers. They have a website which is tax package support. I'm going to show you the link to that in just a second. And what I'll do is when I post this video, I'll put a link to the website in the description beneath the video. But basically what you do is you go to the site, you create yourself a sign up there, right? So I already have a sign in. But if you've never been here before, you'll see in alphabetical order all these companies, and you might recognize some of them because I talk about them from time to time, like Alliance Bernstein, for instance, which is a limited partnership. I have ownership in Blackstone Minerals, so these are companies that I mentioned from time to time, in addition to companies like ICANN, Alliance Resource Partners, right at the top of the screen, etc. These are all limited partnerships or master limited partnerships. Energy Transfer is another one that I mention on a regular basis too. So all these companies that I just mentioned, including the couple that are outlined in the red box here, plus just beneath that Blackstone Minerals, would send me a K-1. So what does it look like? You actually sign on to this website here. It's called taxpackagesupport.com. And what you can do is you can either select from the alphabetical list, or otherwise you can go directly to the partnership that you are a partner of. So in this particular instance, I'm using ICANN as an example because I am a partner of the limited partnership, which is known as ICANN Enterprises LP for limited partnership. So I can select either on taxpackagesupport.com. I can go to ICANN directly, or otherwise I can just scroll the alphabetical list that I showed you on the previous slide And when I find the one I want, I can just click on it. When you do, this is what you see, and what you are going to receive if you click on ICANN once you've set up your account are going to be all your gains and loss calculations. You have the ability to go paperless because they'll send it to you as a PDF instead of sending you paper in the mail and all that kind of stuff. One thing that they cannot do at this moment in time is give you an automated package that you can upload directly into tax software. More about that in a second, because you can do it with a 1099 for sure in the US. And obviously, I don't know about other jurisdictions because I can't speak for them. When you click on ICANN Enterprises, if you are a partner and you've signed up, as I did and as I am, then you will see all the history. So for all the years that I've owned ICANN Enterprises Limited Partnership, I can see the K1s starting with last year, 2022, dating back for as long as what I've held the ownership, equity ownership in the partnership. The other thing that you can see over here on the right-hand side is it tells me the entity type. An individual would be someone like me. A Roth would be a deferred tax account. A partnership would be one of my companies that also owns ICANN Enterprises. So I have a partnership myself, which is an LLC, which also issues a K1. And that partnership also owns ICANN as an investment. So you can see that over here. This big blue block that's in the middle of the screen here is not something you would see. I effectively redacted this simply because this shows social security numbers and the full names of the tax filer. So that's why I redacted that piece. But here you can see everything that's available to you, and you can download the K1s here, or otherwise just open them up to view them, and you can see if it's paperless or not, if you'd like to enroll and not receive paper in the mail. So now, what exactly is the K1? So in the United States, you have a Form 1065, which is basically a partnership tax remittance form. And then you have to enter your Schedule K1 information, effectively duplicating what they've already sent to you. Now, one thing that's important to note here is that if you have a W-2 in the United States as an employee, your employer has already provided the IRS with a copy of your W-2. Similarly, if you are receiving a K-1, in my example from ICANN, the partnership has already provided a copy of the K-1 to the IRS, so they'll get it at the same time or even before you do. And similarly, with a 1099, for instance, for dividends that you've received, the brokerage firm is also providing the information to the tax authority. So what your job is to collect all this information and effectively almost act as a repository to collect it all, and then to tell the IRS, according to me, this is all the income and all the profit and losses I made for the past year, and this is my rendition of the facts, right? And that's why we file taxes, as cumbersome as it may be. Now, what you can do when you look at this K1, some of the information is really, really simple, and some of it will be completed, obviously, on the K1 from the partnership. So this will say ICANN up here and the name and address and all that kind of stuff related to the partnership. And the next information is information about the partner, who would be you. Now, a couple of critical boxes here on this left column of the K1 form are the beginning and ending share of the partner's profit, loss, and capital. Now, as a general rule, this information is not required, but you can submit it for informational purposes if you wish to do so. In most tax filing software packages, this is optional, but the next part is not optional. So over here in section L, you need to write down or copy your partner's capital account analysis. And the partner's capital analysis over here shows you money that was invested in ICANN, so beginning capital, capital contributed during the year, any losses as applicable, withdrawals, if there were any, in the ending capital amount. So what you're basically doing is you are confirming to the IRS that you are a partner in this particular partnership. You do have a share of the profit, loss, and capital. And in addition to that, from a capital account analysis point of view, you had an opening balance and an ending balance. Not scary. This is what a K1 looks like. If you look at the rest of the form, just underneath my little thumbnail picture here, you'll see there are boxes, 1, 2, 3, 4, 5, etc. On the K1 form that you receive from the partnership, there will be amounts in these boxes or not, because if the box is not applicable, it will just be a blank box. So here's an example, right? So in this particular example, I'm showing you ICANN. So as I said on the previous slide, this information is already populated for you, so you don't have to do anything there. And then you can see on the part 3, where it says the partner's share, there's an amount in box number 1, which says ordinary business income or loss. So I suffered a loss here of $3,763. So it's worth my while to actually enter this information into my tax filing, because if I suffered a loss, I can effectively reduce my tax burden. Then I have a $10, like literally, net rental real estate income or loss. So this is income because it's not a negative figure. And then I have a 0 net rental income loss. And there's nothing in these boxes number 4. I have an entry again in box number 5 and another entry in box number 6A. So basically what you do is you look at the boxes where there are entries. If you have to enter it manually by yourself, then all you do is you sit with your K-1 on one side and your tax form on the other side, and you just duplicate whatever's in the box on the tax form. So here's an example. So when you are actually filling the form in, and I know this looks a little bit like DOS 6 for the older guys here, but this is the IRS's official Schedule K-1 form. So now it's asking me, what is your ordinary income or loss in box number 1? So basically, I would look at box number 1 and I'll say it's negative, so it's a loss, $3,763, and I would enter that amount there. Then I would look at the next box where there's an entry, which is box number 2. But how about this? I earned some interest income, $543. That's in box number 5. So I go to box number 5 over here and enter that amount there, and so on and so on and so on. This is not overly complicated. All you're doing is you are taking information from the K-1 that I can, in my example, send to you, and you're just filling it in on the IRS's form. Now, if you use a software package to file your taxes, and in this example, I'm using TurboTax, which is something I'm quite familiar with. I also use TaxAct for some of my companies, so I use a couple of different software packages. They make it really, really easy for you, because instead of giving you a form like the IRS that looks like this, where you have to populate all the information on the right-hand side column, the tax software gives it to you box by box. And what it does is it basically says, is there anything in box number 20? If there isn't, you can just skip it. If there is information there, then you fill in the amount or the code, because sometimes the box doesn't have an amount in it. It just has a code. Let me see if I have an example. Yes, I do, but on the next page. So over here, I have box number 11. And instead of an amount, it says statement, and it says 11A. So now what the software package is going to do is it's going to say, if you have code A under 11, which is other income or losses, what you need to do is you need to tell me what it is. So now I can go onto the next page of my K-1, because your K-1 filing is going to consist of several pages. And I can look at 11, and this is my statement. And I can see for other portfolio income, I have 0. And then under 11A2, I have foreign currency gains or losses, and this is a loss of $8. So I would put that amount in the box and explain it that way. And the tax filing software is basically going through them line by line or code by code. So if you look at box number 20, which is up here on the screen right now, I have 20 A, B, N with amounts next to them. So let me go back to the previous screen, and it says enter box 20 info. Enter the code and the dollar amount. Where do I get that? On the K-1. Enter the code A and the dollar amount, $690, B, $252, and so on, right? As I said, this is not overly complicated. It's actually relatively simple. Now, here's the beautiful thing, because on that note, I'm going to sort of wrap it up from a K-1 point of view, but I do want to quickly flip into the 1099, and I'm not going to keep you much longer. I just have a couple of slides that I want to share with you. The beautiful thing about the 1099 is that most of the tax filing preparation software packages in the United States allow you to actually grab, and through an API, which is an advanced protocol interface, you can extract the information from your brokerage house and import it directly into your tax software preparation package, which means you don't have to key any information at all. What you do need to do is still confirm it in order to say, yes, as far as I know, or to the best of my knowledge, this is correct. But they're providing you with all the information related to your 1099, and then they're giving you the option in the United States anyway. I'm not sure how it works in other jurisdictions, so you guys can help me out on this if you're in different countries. But you can actually import the information related to dividends and any other earnings that you might have in automated fashion, so that you don't have to key it manually. So similar to my K-1 example, this is a 1099 div form. This is the IRS's form, right? So once again, you have boxes, number 1, 2, 3, 4, 5, etc. And if there's anything on your 1099 from your broker, you would have to match them up. So if you receive ordinary dividends of $10,000 for the year, according to your brokerage statement, and you're filing this form manually, then you go to box number 1A and you put in $10,000 of ordinary dividends. If they say it's qualified dividends, I'm not going to go into depth on this one, but the difference is simply whether it's tax deferred or not. Then you don't have to enter the same amount again. What you're doing, I see my camera is jammed, but that's okay. You can just look at my pretty face while I continue talking to you. If there are ordinary dividends and qualified dividends, they're just slightly different for tax purposes. Then whatever the amount is in the 1099, you just enter it on the 1099 div form. So here's an example of a brokerage form for one of my accounts from TD Ameritrade, which is an American brokerage house, an online broker. And what they're doing is they're sending me a package of 1099s. This one's for dividends. This one is for miscellaneous, MISC, and this is B. So section 1256 contracts, I'm not going to go into details on this. I just want to show you that there are different types of 1099 forms. And basically, what the tax filing software allows you to do is to import all this information at the click of a mouse, which means you don't have to key anything. You just go in afterwards and confirm and say, yes, this is correct or not. The other thing is, as I said at the beginning, the basis has already been reported to the IRS or not. But the basis that has not been reported to the IRS in this particular example is 0. The rest of the basis has been reported to the IRS already. So now you can see, just as a quick glance here, as a snapshot, that there's a lot of information on the 1099. In fact, there's much more information on the 1099 from a trade execution point of view in terms of trading stocks than what there would be on a K-1. Because the K-1 really is just one page, and then perhaps a supplementary page, which is a statement with some descriptions or notes related to the stuff that's on the first page. Whereas the 1099 could run into tens or even hundreds of pages, depending on how much you've traded, right? So there's a lot of information on the 1099. If you can import the 1099 directly into your tax software, then it's a win, and there's less work for you to do. So I sincerely hope this was useful to somebody. Given all the questions that I get related to K-1, I thought I may as well just set aside some time and fill you guys in. I'm not a tax guy, so if you have tax questions, you should probably speak to your accountant, or if you're in the US, your chartered accountant, your CPA, or otherwise, any other tax professional that you might be dealing with in terms of filing your personal taxes. But I did want to kind of not make light of it, but certainly put some daylight on this question of the K-1. The K-1 is a form with information, and your IRS tax filing in the US is a form with information, and they just need to match up, and it's your job to make sure that they are either exactly the same or otherwise very, very close. Whatever you do, file, all right? Do not skip filing your taxes. File your taxes. Even if you make an error, it's okay. In fact, just by way of an example, I filed personal taxes recently and forgot to file a particular form which requires me to declare foreign assets. And then all I did was literally today went back into the tax filing software and just updated that information. It wasn't a tax event. It's just information that I had omitted to file when I filed the original filing. So it's easy to amend. It's not scary stuff, right? So just do what you got to do. Make sure you file and do it to the best of your ability, and everything will be okay. Enjoy. And if you are invested in limited partnerships or master limited partnerships, I hope you make lots of money and get stacks and stacks of dividends. On that note, this is Rudy saying goodbye for now. See you later. Bye.